Before we start, I would want you to hit that red subscribe button so that you never miss out on any of our videos. Hey guys, what's up? Welcome back to The Truthy. There's little question that Berkshire Hathaway CEO Warren Buffett is among the greatest investing minds of our time. Covering a span of more than 6 decades, Buffett has transformed $10,000 into a net worth of more than $86 billion and, in the process, earned himself the nickname Oracle of Omaha. Not to mention, he's also created more than $400 billion in value for his shareholders over the years. Curious what one of the greatest buy and hold investors has in his portfolio? Let's take an in-depth look by breaking down Buffett's ownership by sector. Number 1. Financials, 29.05%. Maybe the biggest surprise here is that Buffett's favorite sector, financials, now represents only 29% of Berkshire Hathaway's portfolio. The 32.02% financials tallied at the end of June marked a 9-year low, while the current 29.05% represents the sector's smallest allocation since the market bottom during the first quarter of 2009. Why the perceived financial sector exodus? I believe there to be 2 answers. To begin with, it's not Buffett suddenly dislikes bank stocks and insurers so much as they vastly underperformed the broader market since the March 2020 lows. Top holding Apple has doubled from its March bottom, while money center bank Wells Fargo, NYSE, WFC is down 56% year to trade and has declined below its March 2020 bottom. Number 2. Information technology, 49.33%. The craziest thing about this figure isn't that information technology made up of just 0.43% of Buffett's invested assets exactly 10 years ago and is nearly half of Berkshire's portfolio today. Rather, it's that the entirety of this 49.33% stake is tied up in a single stock, Apple. In an interview on CNBC's Squawk Box in February, the Oracle of Omaha stated that "I don't think of Apple as a stock. I think of it as our Berkshire Hathaway's third business, behind insurance and railroads." Interestingly, it wasn't Apple's technology ties that initially attracted Buffett to begin building a stake in the company in 2016. Instead, it was Apple's incredible branding power that got him hooked. One need only look at the lines wrapping around Apple stores anytime the company releases a new iPhone to understand what sort of branding power the company has. Buffett has also been a big fan of Apple's CEO, Tim Cook, who's in the process of transforming his company from being product-oriented to service-focused. For multiple quarters, we've watched services and wearables grow at double-digit pace on a year-over-year basis. Services are an entirely special higher margin segment that should lead to less revenue lumpiness for Apple over time. Number 3. Consumer staples, 15%. 9 years ago, consumer staples made up more than 45% of Berkshire Hathaway's investment portfolio. Today, that number is down to just 15%, which represent at least a 2-decade low. Based on available data, 13F aggregator website whalewisdom.com, Buffett's ownership in this sector is as follows: Coca-Cola, NYSE Kraft Heinz, Costco Wholesale, and etc. Number 4. Transports, 4.71%. Between the fourth quarter of 2010 and the third quarter of 2016, Berkshire's portfolio was virtually barren of transportation stocks, but that changed in 2016 with Buffett gobbling up stakes in a number of airline companies, Delta Airlines, Southwest Airlines, and etc. Number 5. Communications, 3.79%. Communications is one of those sectors that's always played a relatively small role for Buffett. Even though dividends associated with communications companies can sometimes be robust, right now, the Oracle of Omaha owns the following 9: VeriSign, Charter Communications, Liberty Sirius XM Group Class C, and etc. Number 6. Consumer discretionary, 2.0%. Similar to communications, the consumer discretionary sector has always played a relatively minor role in Buffett's portfolio, with his ownership in the sector typically ranging from 2% to 6% over the past decade. With a few quarters outside this range, Berkshire Hathaway currently owns 4 consumer discretionary companies: General Motors, Amazon.com, Restaurant Brands International. Number 7. Healthcare, 1.18%. The lack of healthcare exposure should surprise no one, given that Buffett has little desire to keep up with clinical trial data or to try to understand a highly complex business. Nevertheless, Berkshire does own 3 healthcare stocks: DaVita, Teva Pharmaceutical Industries, Johnson & Johnson. Number 8. Energy, 0.56%. The Oracle of Omaha is the type of investor who acquires energy companies rather than investing in them. Currently, Buffett owns stakes in 3 that make up just a fraction of Berkshire's $233.5 billion in invested capital: Phillips 66, Suncor Energy, and Occidental Petroleum. Although oil is a key cog that keeps the US and global economy strong, Buffett has often chosen to invest in industries or sectors that benefit from higher or lower oil prices, rather than investing directly in oil players themselves. This is why collectively, this trio only makes up around 0.6% of invested assets. Number 9. Materials, 0.34%. Another industry that's pretty much been an afterthought in Buffett's portfolio for 2 decades and counting is materials. At 0.34%, Axalta Coating Systems in Berkshire's only stake in this sector. Buffett first bought this into Axalta 4 years ago and owns slightly more than 10% of the company's outstanding shares. Number staples, 13.56%. Finally, consumer staple stocks, companies that provide essential products like packaged food and beverages, have shrunk to less than 14% of Berkshire Hathaway's investable assets. This marks at least a 2-decade low and is well below the 45.5% allocation given to consumer staples 10 years ago. Why no love for consumer staples? One explanation might be the relatively low interest rate environment that we've been privy to now for more than a decade. Consumer staples are usually mature, slow-growing businesses that benefit when value stocks are in favor. However, access to cheap loans has allowed growth stocks to vastly outperform mature businesses as value stocks. As a result, most consumer staple stocks have been running in place for years. As Apple has grown in value as a percentage of Berkshire Hathaway's portfolio, the allocation given to consumer staples has shrunk. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so that you don't miss out on any of our videos in the future. Also, watch the 2 videos that are on your screen because I am sure that you'll love them. With that, I'll see you in our next video.